secure the bag, yeah, that's the brand, and we get to the bag.
Felicia, what's going on? Travis, shout out to Travis. What's going on? Mike, as usual. Slim's here. Benita's here. Hopefully, you all had a good week. Corey, I see you coming in. Hopefully, y'all had a good week. And for those of you that are able to, y'all locked in to the live event in October in Phoenix. Should be pretty cool with SCB. So if you were at that class, hopefully you got locked in. However you're coming, whether you're VIP or just regular admission, it should be a good time. A great networking event. Noah's here. Today we are going to be talking about big money. And when I talk about big money, I'm really just talking about hedge funds. Okay, Wes, I see you coming in the building. Okay, hedge funds, hedge funds, hedge funds. For those of you that are here, right? Put one in the chat if you ever heard of a hedge fund. Okay, I know we have some people that are more new to the stock market, but if you are familiar with hedge funds and big money, then put one in the chat. Okay, cool, cool, cool. So, someone said billion. Hey, big hedge, right? AKA, thank you, Noah. AKA Wales. Yep, we're gonna go over that. Okay, cool, cool. So you all have heard of hedge funds, right? I like that, Rouch. Smart money. For those of you that heard of hedge funds are pretty much in the market, just like retail traders. There's a little bit of well, not a little bit, a lot of of distinguishing factors when it comes to hedge funds or whales and retail traders, which we're going to get into. But just thought this was kind of a funny way to open up the class with this image, as it says, "Hey, look, you're safe. You're in safe hands, okay? Mr. Stevens is a hedge fund manager." So I thought that was a little comical. If you're still kind of like, I don't know what that really means, no worries. We'll kind of get into it a little bit later. But before jumping in all the way into this class, y'all know I gotta ask my question. So y'all had it, y'all just started the month, right? Hopefully some of you all have been, getting the budgets and everything together. What's one expense that you can cut right now? Like I'm talking about, you need to cut it out. You need to pull it back. I want to know, before we get into class, what's one expense that you can cut right now so that you can take advantage of this market? Rajiv said bills, right? Akeem, ordering out. That's a big one. Slim, haircut. Right. Eating, weed. Okay, okay. I'm working on food, shopping, red bottoms. Right, right, right. Okay. Haircut is a big one. Food is a big one. Okay, someone said nails. I like that. I like that too. I'll be honest, at one point food was my biggest expense for sure. Like one of my biggest expenses. Um weed eats your money up, no joke. Got bare bread since I cut that Yeah, man. Yeah, it's crazy. Unless you and the dude or the person that's selling is cool, you know what I'm saying? Y'all getting it for the free. That it can add up. It can add up for sure. And I think that's something that I want you all to pay attention to is really a lot of the times the expenses that you can cut out are actually corresponding to your habits, right? Like if you're eating like out a lot and stuff like that, that adds up over time. So, but if y'all can start to dwindle away at that shit, man. And I'm saying it like that because I know for me, like I started cutting my hair a while ago. One, because where I live, they're charging like $85, $90 for a haircut. And I'm just like, okay, this is ridiculous. I cannot pay $90 for a haircut. Even though I'm not gonna lie, I was fresh. I was definitely fresh. Corey said Uber. Uber, wild. Wild. Uber was wild, especially during the pandemic. Uber was absolutely wild. Like crazy. But yeah, $85 for a haircut, you know what I'm saying? For a fade, right, Noah? I was like, nah, YouTube gotta see me. YouTube has to see me. Like, it has to see me immediately. Yeah, I'm saying, man, if you think about it, 90 bucks, man, look at this. 90 bucks. 90 bucks times 12. That's $1,000 a year. You know what I'm saying? Like, you can average that into a stock and you can do some pretty good things. That's way too much. But yeah, haircut and food was mine. So, all right, Brian, inflation. Definitely inflation. I talked about it. Raise every 2 weeks. What I should have did is I should have learned how to do hair, especially females. Like I should have learned how to do hair for females. That's what I should have learned how to do. That would have been a nice side hustle. But want to let you all in on a little secret. I kind of mentioned it, but I'm saying, yeah, it's a great hustle. It's a great hustle, man. Great hustle. But I want to let y'all in on a little secret. I think I talked about it when I was when I gave you all my budget tool of how I just track my transactions on a monthly basis, right? This is the other component, which is Rocket Money. Now, I went ahead and grade some things out. This is back in the day, not back in the day, but this was earlier this week. Just grade a couple things out because few transactions, I don't want kind of people knowing, but essentially, y'all, this is a really cool feature that I like about Rocket Money. If you can, maybe play around with it. I don't know if they're giving out some free trials or whatever, but what's really cool about this is more so of your subscriptions that you can actually get control over. And so as you can see here, once you get this in order, what happens is you now know what expenses for the most part are going to be coming before they do. Now, why is that helpful? If we are investing, right, we're trading, why is it helpful to get this in order? I want to know, someone can tell me in the chat. Why is it important to make sure that we know what's coming up as it relates to our bills and our subscriptions if we're trying to trade, if we're trying to be profitable? Let me see who's going to put it in the chat first. So we can, thank you, Dom. So we can plan accordingly. Slim said cash flow. I like it. The whole point of this is to be proactive, y'all. One of the really good things that I think Warren Buffett said was, hey, look, however you make money, even if you're working a job, pay yourself first. You know what I'm saying? Pay yourself. Don't pay these other businesses. Don't pay Chick-fil-A. Don't pay Zaxby's. Don't pay Chipotle. Don't pay the club. Right. You know what I'm saying? If y'all can, like this allows you to really, and the thing is too, I talked about it too, like sometimes it takes time for money to transfer. I'm still working on that with E-Trade. I don't know why it's still taking me a long time. But the earlier you can get that money into your brokerage account and invest it into the stock market, the longer time you have it to bake and the more profits you can make. So really good tool. I just wanted to highlight this. But yeah, y'all, let's go ahead and let's jump into today's class. I appreciate the participation. So let's get into it. So what's a hedge fund? What's a hedge fund? Hedge fund is, in very simplistic terms, a limited partnership in which a fund manager manages capital given from investors, okay? Hedge funds can be called whales, they can be called big money, they can be called institutional traders. These are all the different types of terminologies that you will hear in the market when referring to an actual hedge fund, okay? Now, these hedge funds, they're known to invest in a range of assets, and they're also known to use a bunch of different strategies to actually maximize returns for the people that give them their money, okay? I will say when it comes to a hedge fund, the big hedge funds that you probably hear about, which we'll get into, some of the people that actually own those hedge funds, there's usually going to be some type of minimum threshold in terms of net worth, right? A lot of these people are looking for maybe a lot of these higher earners that are looking for ways to actually place their money in something in order to keep that thing growing, okay? And Brian talked about it. I like that, Mr. Ben Griffin. Griffin, yeah, exactly. But Brian hit it on the head. He said inflation, coach, when I was talking about my haircut and how much it was costing. And that's essentially what happens when you start getting a large amount of money, y'all. Like that inflation becomes more and more of a problem, and they need different outlets in order to actually find people to actually help them keep that money, right? And a lot of times they may not have the time to actually do what we do in terms of understanding the market or whatever, or they're just not familiar with the market, period. And so they give their money to a hedge fund. Val, I see you coming in. Now, The thing about hedge funds, and for us, we may actually be a little bit more, we may have more exposure into what's called maybe like a mutual fund, right? It's kind of the same concept in a way, right? You're giving your money to a fund to help them manage it, and they're investing your money and they're promising some type of performance in return. Either way, mutual fund, hedge fund, what can happen is there can be several fees that are actually involved in this process, which can actually put you at a disadvantage. And I'll get into the illustration on the next slide here. Some said 401k. I see you, Stag, coming in. Yeah, 401k is, I would say, another vehicle that can not really be the best, in my opinion, in a lot of people's opinion, SCB, not be the best way to actually make wealth and to make money, right? Um, but there's a lot of fees. So you have management fees, you have performance fees, you'll have entry and exit fees, and you'll have administration fees. Don't need to get into like the logistics of all these fees, but just know that when it comes to these funds, okay, a lot of times what's happening is they are taxing you in terms of the fees that they're applying to your money. It's basically robbery. Right. It's basically robbery. And today, what we're trying to do, and what this whole presentation should do, is it should make you appreciate trading and wanting to empower yourself and actually do things on your own. But it also should humble you too. And we'll get into humble and why it should humble you, okay? Because there's a certain way that we have to navigate the market because of these types of entities, right? So, highway robbery, like Val said, let's get into it. So what like happens in a hedge fund? What actually kind of happens maybe even in some mutual funds, right? Actually, I know this happens in some mutual funds, maybe just in a different way, but essentially this is kind of an illustration. So this is you. You're the investor, okay? You're saying, hey, look, Mr. Hedge Fund Manager, Mr. Mutual Fund Manager, this is my money. I'm going to give you my money, okay? The hedge fund manager, right? He's already talked to get game to you, or she has already talked to get game to you, and said, yeah, you know what I'm saying? We outperform the S&P 500. We do X, Y, and Z, yada yada yada. This is then the third, okay? And so they're gonna gain your trust. You're gonna give them your money, all right? And they're gonna promise you probably 8 to 10%, maybe 12%, right? And to the average person, right? The average person, 12%, 10% a year gain on their money is great. That's solid, right? That's what a lot of these hedge funds promise to their investors. And so that's kind of been the norm in the status quo. Um, right? Like, I don't know if someone maybe wants to chime in, but at the S&P 500, on average, probably gets you about somewhere in the same ballpark, maybe 8 to 10% a year, 12% a year. Now, so there's probably going to be some years where it gets crazy, but that's really what we're looking at. And so they promise you 10%, okay, but they take this money and they start making 10% a week on your money. So by the end of the year, they made 1,000+% return on your money, and then they dish out the 10% to you. And then on top of that, they're charging you fees for that 10%. Oh yeah, but by the way, there's a performance fee that yeah. We gotta, yeah, okay, yeah. Oh yeah, and there's gonna be some entry and exit fees that we incur when we're actually investing your money. So yeah, we're gonna go ahead and yeah, we're just gonna pencil that one in. Yeah, and then we got a bunch of administration fees. We're in the office, you know, so yeah, we're gonna have to take some more of that. Yeah. And so this is what's happening, y'all. This is what's happening. And this is why it's important for us to understand this and to be able to really understand the vehicles that are being used to actually build wealth. If that is your goal, right? If your goal is to build wealth, generational wealth, to build freedom, so that you have a lot more time to do whatever you want to do, in a sense, when you want to do it, we have to make sure that we are playing the right game. Now, if you look at any of the most wealthy people in the world, right, Rajiv? If you look at any of the most, successful or just, I don't even say successful, just wealthy people in the world, because sometimes you can be wealthy and not really be successful in other people's eyes. So let's just say the most wealthy people in the world, what you'll notice is they use a couple vehicles, maybe three vehicles at most, in order to actually get to where they gotten. I don't think Jeff Bezos has a 401k. I don't think Elon Musk has a 401k, right? These are things that we have to understand, right? A lot of these people are creating businesses. Okay, they're usually either in the stock market, right? They have real estate, and then you have other people too that can create wealth from just honing in on a skill, right? LeBron James plays basketball. That is a skill. He got very, very good at this one skill, right? And now he's able to take that skill, earn money from it, and then take that money and diversify it to actually build more wealth. Okay. Same thing with all these other people. You have, Jay-Z, you have all these other people. And we're talking about people that are essentially more of like first generation wealth builders. Okay. You do have some people that come from old money, right? But in terms of new generational wealth, people that have never had money in their family and then gain it, we have to understand how they got there, right? So there's that. Corey, yeah, my job automatically put me in their 401k. I closed it ASAP. And we're gonna, I'm thinking about maybe bumping that class up because that's a good point, Corey. But I'm thinking about bumping that class up where I want to be able to like highlight how your job doesn't have your back the same way that these hedge funds don't have your back, right? Um, if your goal is to really build wealth and stuff like that, there are things that are intact for you to actually um to stay at that job for a long time. Okay. But I'm thinking about moving that class up, but that's a good point. Thank you for that. So let's kind of get into the difference. Okay, let's kind of get into the difference between retail traders and hedge funds. Okay. Retail traders, which this is what we are, okay? SCB, like we are a conglomerate of retail traders. No worries, Damien, no worries. Retail traders, this is more stereotypical, okay? Like we are not going to be emotional, right? We're not going to be emotional, but majority of retail traders, they're going to be more emotionally driven. They're going to have less capital than, let's say, hedge funds for sure, but just less capital in general, and they're trying to get rich quick. Okay, like those are the three things that like I would say are pretty known for retail traders. Now, when it comes to hedge funds are going to have a lot more capital, they're going to have a lot more resources, they're going to have more influence on the market and media for sure. We'll get into that. And they're looking for smaller, consistent gains. And the thing that is actually congruent between the retail traders and the hedge funds is what you see it. We all trying to make money. We all trying to make money, but we have to realize what arena we are in and what we are actually up against, y'all. We are retail traders, okay? We are retail traders, and there's nothing wrong with that. Now, some of y'all, one day, y'all might want to start your own hedge fund. Cool stuff. Kudos to you. But until that day comes, we have to know where we are and we have to play a game that's going to put us in the best position possible to succeed. And so just knowing this is really almost half the battle. STB hedge, let's go. Exactly. Other things that I can say about a hedge fund too, they're going to be more heavily regulated than the retail traders, right? There's a set of guidelines that they have to follow to make sure that they're compliant, compliant and whatnot. So that is probably more of a disadvantage for a hedge fund than a retail trader, right? And something else that I would say is pretty similar too is, hedge funds, they feel pressure too. They may have more capital, more resources, but the people that work for these hedge funds, like they have targets that they need to hit, right? They have people's money at hand. They have a lot of money at hand. And so a lot of times that's also pretty, intense in terms of the amount of pressure that they can feel as well. More so maybe than a retail trader. So that may be another disadvantage, depending on who you are and how you look at things. But let's get into some of these famous hedge fund managers. I want to see who has been paying attention to just the market in general, right? I see a few people on this slide. We have some people chiming in already. I was gonna ask, who are these people? Dom said, I don't see Axe up there. I'm gonna get into that later in the in the presentation. All right, Dimitri, Bill Ackman, right? Ray Dalio. Does anyone know who this is? Does anyone know who this is? Bill Ackman and Ray Dalio. Those are pretty. Yeah, Kiara. I believe it's Kiara or Kiara. Yeah, maybe. Let me know if that was right. But is that Dalio? Yes. Dimitri said George Soros. Nah, George Soros. That's not him. Bloomberg. Nope. Nope. Oh, come on, y'all. Y'all gotta know my man's. Y'all gotta know my man's. I learned about him recently in just my astrology class, actually. Face looks so familiar. Okay, y'all. I'll tell y'all. That is Paul Tudor Jones. Paul Tudor Jones. Bill Ackman, Ray Dalio, Paul Tudor Jones. These are some of the. You probably know the name, just not the face. Exactly. And that makes sense too, Slim. You know, but but yeah, y'all. These are some of the people, and I think Ray Dalio. He stepped away from his fund, but these are some of the people that actually run some of the most successful hedge funds in the world. Okay, for sure, and have amassed a lot of wealth doing so. And so when we talk about wealth, and when I talk about, hey, these hedge funds have more capital than us, the question is like, how much more capital, how much more money are we actually talking? Like how much money are we actually talking? And someone actually said it in the actual, maybe they were referring to the show. It wasn't Don, but it was before, but I was like, what's a hedge fund or whatever? And someone just put in like billions. And it's like, yeah, no, like these people, these hedge fund managers have billions of dollars in assets that they manage. Okay. Billions, y'all. Billions. Look at this. Paul Tudor Jones, 12 billion. I think someone said Ken Griffin or Griffin. Yeah, that's the Citadel. Okay. That's actually I want to say headquartered in Chicago, but 62 billion in assets that they manage. Okay. And then Ray Dalio, at one point he was managing 124 billion in assets. Okay. And so this is the type of capital that we are up against in the market. Val said love Ray. Yeah, love Ray for sure. This is the type of capital that we are up against in the market. And so when it comes to us and we talk about our trading plans and we talk about, you know, wanting to be profitable, wanting to be successful, you have to understand that to be real, we're playing against billions of dollars, right? Yeah, and that means that we have to move a certain way. Now, what I can tell you is that these people, the more money you have, the more opportunity you have to essentially kind of manipulate the market. Yeah. Yep. BlackRock is another good one. That's another good institution for sure. Yeah. The more money you have, the more opportunity you have to actually move the market and kind of dictate the market, maybe in a short term, on a short term basis. And so what I can say is that when you have this much money, right? when you have this much money, you're not really looking for a 300% return, right? Like on your in one trade, I'll say that. Like you're not looking for a 300% return in one trade. You're not looking for a 100% return on one trade, right? They're looking for at most, think about it, y'all. Like they can get if you go into a play with, I don't know, depending how much money you want to go, let's just say $1 million. 1% of $1 million, Damien said 20%. Yeah, it may be 20%, it may actually be lower, but think about it. They go into a play, depending on what stock they're in, with $1 million plus, $10 million. okay, and they get a quick, 2%, 3% pop, that's millions. That's millions of dollars to them, right? Sean said 6%, right? And so this is kind of why, or this is the basis for why we say, hey, look, get your 10%, your 5 to 10%, and get out for short term. Because big money, billions of dollars, that has more of an influence over the market, they're looking for those small returns, right? And so as a result, what can happen is, or what we should be trying to do is, we should be trying to emulate to a certain degree what big money is doing, right, into our plan. Now, if you want to put a large amount of money in and like wait longer term for a bigger return, that's fine. But more so just talking short term, okay? We should not be trying to go into this mentality in a way that really kind of goes against what they're doing, right? Because if they have billions of dollars and they're doing this, then our, $100,000, we have to be careful of that too. So there is that. Now, something else to note is we talked about like their strategy and how they like to really get these bunt hits, like Mike said, right? Does anyone know which time frames that these hedge funds like to play on? Anyone know which time frames that they are most likely to play on? Because they're looking for these bunt hits. What time frames are they looking to play on? Dom said the 15-minute. Slim said the 1 minute. Okay. We have some weekly. We have minute charts. Dimitri said 5 minute. Damien 1 to 5, 15-minute. Okay, cool. Those of you that are on the smaller side of the time frames, yeah, and I think someone said it, but really under an hour, okay? Because that's essentially all the movement that they need, right, y'all? Like, now, this is more so trading, okay? We're talking about trading. You do have firms that will invest, okay? And they will look at more of those bigger time frames, like the weekly, like the monthly. But when it comes to trading, they are under the hour, right? They're under the hour. They're getting really into it with the minute, 15-minute, 5 minute. And what they do is they have algorithms. Okay, a lot of them have algorithms that they can leverage in order to help them make their trades. And this is why, thank you, Slim. Yeah, it makes perfect sense. They don't like being exposed for lengthy. Trust me, y'all, if you had, you know what I'm saying? If you had billions of dollars in the market, millions of dollars in the market, you're not really trying to like, if you're trading someone else's money, you're trying to lower your risk of losing that money. So you're not trying to be just hanging out and chilling when you're trading that type of money in the market. Like, unless you're long, unless you're trading stock or whatever, like, yeah, you're not trying to be in there for too long. You know what I'm saying? And so, because of the size they play with, they can actually manipulate the, yeah, and Dom, exactly, because of the size that they have, like I said, you can manipulate that amount of money. And so this is why we tell you all as retail traders, okay, that maybe want to actually play on smaller time frames, to be careful, okay? We're not going to be able to make everyone play on larger time frames, and that's really not the point, because you can make money on smaller time frames, right? It's just going to be more risky because you have this going on. You have algorithms and you have big money that essentially can actually manipulate the stock on those shorter term time frames, and it's just a lot more choppy. Rochelle, what's going on? No worries, no worries. All good, right? It's a lot more choppy. For those of you that have ever been down to the 15-minute, I don't want to say maybe the 1 hour, but the 15-minute, the 1 minute, the 5 minute, it almost looks like dots on the screen. Like, it's just like, it's extremely, there's no candlesticks, right? It's very choppy. And that's really the algorithmic trading doing what it does, okay? And so hopefully this kind of gives you all a better visual of like, hey, this is why we have these rules in place, because at the end of the day, and this was said by a famous hedge fund person or a person that worked at Goldman Sachs, STB, you know what I'm talking about. I can't remember his name. I think it started with the A. But essentially, this guy was just like, hey, look, in order for us retail traders to level the playing field with these hedge fund traders, what we have to do is go into bigger time frames. Go to something that's above the daily chart, right? The daily chart or above, that's really where you're going to be able to level the playing field. And part of the reason why is because when it comes to these institutional traders, they're using algorithms, right? And I would also say that they're using fundamentals of companies. I don't know if they're using as much technical analysis. I'm sure approaches change from hedge fund to hedge fund and how they want to go about doing stuff. But what we do know, based off of just some of the things that Tay has told us in STB and things of that nature, they're not as keen or focused on technical analysis as you may think, right? And that's where we kind of get our edge because we, for the most part, majority of people are more technical first when it comes to trading in STB. There's a few people that have built their own sauce or whatever, but this is kind of the game that we're playing, y'all, for sure. Now, I want to go ahead and get into some of the examples or some of the things that when it comes to hedge funds, you know, I just think it's good to know. I think it's good to know, and like maybe you'll see some familiar faces here, but who knows this person? Who knows this person? Jim Cramer, Mad Money, right? Mad Money. I have a short clip I wanted to show you all. I was able to find it. Cramer used to actually work at a hedge fund, and I think this will be interesting to actually show you all. I just want to make sure that the actual sound works. So let me see if I can actually go ahead and play this for you all, and we can actually go ahead and get into this. So I'll play it a little bit, then when I do play it, y'all put a 1 in the chat if you can hear it, okay? Just so I know that you all are getting the message. I think the sound's gonna come on in a second. Oop. All right, real quick, can y'all hear? I didn't see a 1 in the chat. Okay, can't hear, don't hear anything. No worries, no worries, no worries. Let me actually let me try something real quick. I might need to reshare with volume. Yeah, that's probably exactly what I need to do. Let me try to do this real quick. So let's kind of get into it again.
It's the holiday period. Welcome to Wall Street Confidential. I'm Aaron Task, joined again by Jim Cramer. Jim, welcome.
Nice.
Good to see you. Thanks for being here. There's a lot of economic data out today, but I want to talk about something else first. Again, today we have the misdirection from the futures. The futures pointing to an up market, and as of right now, stocks are down again. Is this just because it's the holiday period that we're seeing this?
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. Maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday, and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal,
right?
And it is a very quick way to make money and very satisfying.
Okay. Well,
by the way, no one else in the world would ever admit that, but I can care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
Well, on a related note, there's so many more hedge funds today than when you were managing your hedge fund.
Right.
Do you think that does that exacerbate the moves, or does it make it tougher?
Well, you know,
'cause
the hedge funds are positioned long short, okay, not just long like mutual funds. So it's really vital these next 6 days because of your payday. You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So let's say I were short. What I would do is I would hit a lot of guys with RIM. Now you can't foment. That's a violation of
Foment?
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to do a lot now to save itself. So this is different from what I was talking about at the beginning where I would be buying the Qs and stuff.
Right.
This is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment. If I were one of these guys, foment an impression that research in motion isn't any good because research in motion is the key today. So you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid, take and bid, take and bid. And if I wanted to go lower, I'd hit an offer, hit an offer, hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on research in motion. So we're seeing that. That's, again, when your company's in a survival mode, it's really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the bozo report on research in motion and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game.
Okay. Another stock that a lot of people are focused on right now seems to be Apple.
Okay. All right. All right. So there's some interesting things said. Interesting things said as it relates to Mad Money Jim Cramer, right? And what these hedge funds are doing. What are some of the things that stood out to you all? Maybe this is someone's first time actually hearing this video. But what are some of the things that stood out to you? Madoff Jr. They tell us everything we have. We just have to listen, right? I like that, Dom. Yeah, they do. My first time, right? They're crooked. Gotta protect rich people's money. Yeah, so Stead, to your point, right? When he talks about, hey, look, this is how we're being evaluated, okay? We have 6 days until, our evals come up and I need to make something happen so that I'm in the best position possible. One, so I can protect this money, but so two, I don't look bad to the company. That's pressure, y'all. Like, that's pressure. You know what I'm saying? You have millions of dollars at your hand and you're trying to go ahead and do something in order to actually make sure that you're in the best position possible to showcase your actual expertise in the market. What else is going on? Let's see what the chat's going. I like the chat today. Rochelle said they're crooked. That's the power of big money. Yeah, right. If it's legal, they'll do it. Right. And I would say there's definitely a legal, what is that, quotation marks around legal? So for sure. This is why you do the opposite of what Kramer says, right? Point blank, they're going to get their bread. If it don't happen naturally, they're going to make it happen. Thank you, Slim. I like that point because a lot of the times, y'all, big money rarely loses. Rarely loses, okay? Rarely loses. One way or another, they're going to get their money. And because of that, there's certain things that we can actually look to what they're doing and use as confluence to help us, right? But to Slim's point, they're definitely going to get their money. Sandra, they have the power to move the market in their favor. Yeah, they do. I wouldn't say long term they do, but definitely in the interim, in the short term, yeah. I can't believe this is not legal. This is legal, yeah, for sure. And I believe it's Geraldine. But yeah, I wonder why his hair gone. Right now, Nancy chiming in first time in the class. No wonder why his hair gone. Yeah, y'all, like, trust me, this is, I don't know what you call that. I don't know what type of haircut I don't know. Yeah, I don't know what Buddy was is going for, but it looks like he's had that style for a long time. I'll say that. Don't hate the game. Most of us play the same, right? Word of mouth. I think another really interesting point is he talked about like user research. K he talked about user research and feeding, you have to defeat, user, I think he said user research or something along those, or market research and emotional emotions around that. I think the thing that he was trying to get at is like, hey, look, like a lot of times what we have to do is we have to make sure that we can feed the media things that can help us in the best way possible and really get the retail trader, which is us, to fall for it. Lawmaker and lobbyists have their money in there too. Oh yeah, and that's another point I was going to say, Stead. And so remember I talked to you all about the fact that these hedge funds have thresholds in terms of net worth, right? Sometimes it's net worth, and sometimes it may just be connections, okay? So for example, you have some politicians, you have some lobbyists or whatever, right? A lot of these people, they may not be wealthy coming in, right? But they may leave wealthy coming out. Don't want to say too much. They may not be wealthy coming in, but they may leave wealthy coming out of their actual, their time served. And it's because what they'll do is essentially, to Stead's point, they'll get close to these hedge fund managers that are managing billions and millions of dollars. And what they'll do is they'll side with them, right? They'll get it so that they can enforce certain laws to help them move and help them get their money. And then what will happen is they'll pit, look, I have about 126 billion in assets, right? I'm only promising this person, 10%. Yeah, go ahead, we'll give you 20, 20, 10 million, just enact some of these laws for us and, make this legal because we want to protect the reputation of the fund, right? We want the people to know that their money is going to be safe. And so really interesting points, really interesting points, really interesting things that you all should see. And this is somebody that is now, he's been on TV for a long time, okay? He's been on TV for a long time. And so when I say, like, when we talk about, like, don't listen to the news or be able to see through and read through the lines, this is essentially what we're doing because there's a system, y'all. There's a system in play, right? There's a system in play. Thank you, Slim. Watch Billions. Great show. I'm going to give y'all some shows or just some other documentaries that you can watch to really help just kind of understand this. Because believe it or not, y'all, like, that's homework too. That's homework too, okay? Because essentially, if we don't know how our opponent is moving, if we were athletes and we weren't studying our team, our opposing team that we're going to play, then maybe we win, right? But let's say we play them 7 times or 10 times. If we're not studying what they're doing, there's a pretty good chance that we're not going to win consistently, okay? We're not going to win consistently. Exactly. So I thought that was an interesting point and something that you all should actually go ahead and really make sure that you are aware of, okay? So I hope that kind of opens some of your eyes. Another thing that I wanted to point out in terms of how these hedge funds move, kind of supporting some of the things that Kramer talked about, is essentially what he said when he's talking about, hey, like we need to feed the media, certain things in order to actually get these emotions riled up so that the stocks can do certain things and we can be in a better position, right? Because think about this, y'all, and he said this, they are a hedge fund, okay? They're not like a mutual fund that are just long. They're a hedge fund, so they're long and they're short. What that means is, and one of the principles of SCB is to hedge, okay? Hedge fund, hedge. So we emulate a lot of our strategies based off of how big money moves, okay? Because we're not trying to battle up against them. No, we're trying to move with them. Yeah, I'll make sure I can drop the link for US. I think it's about 10 minutes long. We watched the first 3 minutes, but it should be on YouTube in certain places. But essentially, all this is kind of what we're talking about. So when you see downgrades, oh, Morgan Stanley downgrades so and so, or Bank of America analyst so and so downgrading Square. Beyond dives 25% after JP Morgan downgrades Beyond. Da da da. Be mindful of this type of stuff, okay? To the novice, to the novice, what happens is you all see this, right? And then you go, oh man, I gotta get out of here. Beyond there some person that I don't know who works at a hedge fund who's probably connected to all of this other behind or underneath the table stuff is telling me that this stock is falling. I gotta get out of here. And what you don't realize is that when you start selling the hedge fund, which Kramer didn't talked about, they're long and short on a stock. So what they might do is they might try to get you to sell so they can help bring the stock down. They're making money while the stock falls, and then they'll take that money when it gets to their price target. They'll put the money in going up or going long, and then they'll make money when the stock actually moves up. And so they are hitting you over the head 2 times. And then you're at home wondering why you can't win. Is because you're more emotionally driven because of stuff like this, because you just don't understand the game, right? There's technical analysis, there's fundamental analysis, there's all these different things that we have to take into consideration, but please understand the game too, right? This is more of the just the common notion of the stock market. And honestly, I think this is one of the things that makes us so competitive with STB and really with Tay, right? Is that we're able to actually go ahead and understand how this is being played for life, right? And thank you, Slim. And that's something else too. So this, honestly, y'all, this like even if you don't watch some of this stuff, if you watch Power, if you watch any type of right, if you watching some of these movies regarding selling drugs or seeing how some of these people move, these people are moving the same way as the drug dealers, right? Like as you know what I'm saying? Like they're making the similar moves and putting the same systems in place in order to make them more profitable, right? It's the legal drug game, right? The biggest, I think, and this is what people say too, is like the biggest gangsters in the world are the people that are on Wall Street. Like, biggest gangsters in the world. I'm telling y'all. Like, exactly, exactly, exactly. And I'm not saying this just to again, this is not to like, discourage anyone and be like, oh man, like the world is such a terrible place and whatnot, right? But we gotta keep it real. We gotta keep it real with y'all. Not enough liquidity in the drug market. No, they ain't. It ain't. You know what I'm saying? It ain't. It ain't. There's a lot more liquidity here. A lot more liquidity. But there's a lot of advantages too that I can say can help us as retail traders as we see how these hedge funds move. Number one is that we get to emulate a lot of the things that they do in our strategy, right? We don't have billions of dollars, but if I had billions of dollars and I'm in a hedge fund, and essentially what Kramer said is like, hey, look, we're hedging with all this money, then that means that as a retail trader, we should at some point be trying to hedge our positions. There's a reason why they're doing this, y'all, right? The answers are right in front of us. We just have to see. I think Dom said that. The answers are right in front of us. We just have to see. Now, you need a certain amount of money to start hedging properly, right? What I'm saying is just with STB, one thing that we try to do is we almost try to reverse engineer a lot of the things that these hedge funds do so that as they make money, we make money too. I'll say that. So you saw the clip with Kramer. You're seeing some of these articles about downgrades and how, some of these things are fed from hedge fund people in order to get the stock to do certain things. I want to go into another aspect of big money or just big icons that are in the stock market. This is another clip. It's pretty funny. So when I showed you all the picture of the hedge fund managers, Dimitri, I believe he said that, hey, look, one of those people is Bill Ackman. Now, Bill Ackman and this man here, Kyle Icahn, okay, these are two people that are very successful, hedge fund managers that have been in the game for a long time or investors. And something else that you're going to know in the market or see in the market is that you're going to have really, really credible traders and investors say things, and you need to be able to also understand what's going on too, okay? So I want to just show this clip for you all, and we can talk about it a little bit, but want to just kind of present this. This is pretty interesting stuff, something that happens a lot. This is just something that happened to the public, but this is what happens, a lot of times behind closed doors. Let's get into it.
That Bill Ackman and Carl Icahn brawled live on CNBC over Herbalife. Ackman, of course, short the stock. He called it a pyramid scheme and that it was heading to zero. Icahn took the other side, then took issue with Ackman himself. Here's how it unfolded that January day as I was hosting halftime from right here at the New York Stock Exchange. The war of words between two hedge fund heavyweights is heating up, with Carl Icahn bashing Bill Ackman over his short position in Herbalife.
Ackman does pump and dump. He's got one of the worst reputations on Wall Street. And I'm going to tell you, this Herbalife is a classic example of what he does. And I'm telling you, he's like the crybaby in the schoolyard.
Carl Icahn thought, you know what, this guy's roadkill on the hedge fund highway. I'm never going to have to worry about this kid again. He's not going to even have the resources to sue me. This is not an honest guy, and this is not a guy who keeps his word, and this is a guy who takes advantage of little people.
I mean, I wouldn't have an investment with Ackman if you paid me to do it, if Ackman paid me to do it.
He's not used to someone standing up to him. I told Carl after the whole thing, he called me up, and he literally said, Bill, we can be friends now. And I simply said to him, I said, look, Carl, you are no friend of mine. And that was it.
I never said that I want to be friends with you, Bill. I wouldn't be friends with
Carl.
you. And I would. You said to me you'd like to be friends so that we could invest together.
Carl, I have no interest. Do you think I want to invest with you? Okay, let's move on.
I would invest with you if you were the last man on earth.
All right, joining us now is Kenneth Squire.
All right. So wanted to present this because another thing that's going to happen, you all, is you're going to be in a stock, okay? And it's going to be, all right, the music after. They went and played golf. Oh, Rochelle, you're right on to what I'm saying. So this is what happens, y'all. This is what happens. And we have to think about this. So one, let's kind of break this down. You're going to be in a stock at some point in your investing career, trading career, whatever, and there's going to be people that have billions of dollars talking about your stock and what's happening and what's going to happen, right? And you're going to have one person say, oh, this is trash, this person's trash, this stock's doing this, and the other person's going to say, no, this stock is actually doing this. And so a lot of this is more, I would say, entertainment. It's more fake news. To a certain degree, I do think that maybe there was some tension between these two because of the positions that they had, but I do think that there maybe was something else going on behind the scenes for sure. Because if I have billions of dollars, you have billions of dollars, what's the beef? What we beefing for real? Like, I don't need a beef with nobody if I have $1 billion, right? Like, so I'm thinking that they had something else going on to where they're like, hey, look, let's actually go ahead on this Herbalife. Let's see if we can maybe, stage something, whatever. And then as a result of that, this can probably happen. Maybe a meeting before the meeting, right? Do I think, do I think this was just like a very reactive situation where they just got on here and started arguing and oh man, like billionaires are brawling online on the internet? Like, nah, I don't think so. So I want you all to be aware of this type of stuff because for the people that maybe are in Herbalife, retail traders, this can make them very split in their decisions and make them second guess the work that they have done in order to prepare themselves for whatever that they're trying to do with their stock, right? Like, so we have to have a mind of our own. We have to be paying attention. And to Rochelle's point, this is a distraction. And they probably went ahead and they played golf the next day, right? They probably went ahead and played golf. Corey said we do that at Lodge. Right. Scripted. I'm not going on the internet and beefing with nobody if I have billions of dollars. Nobody. Not intention, not just because I might do it strategically, but I'm not just doing it because like I'm just I hate this guy. No way. I don't need to hate nobody. Like I'm chilling. I'm good. You know what I'm saying? So these are all kind of interesting and wanted to give you all this exposure to how big money moves and what they do so that we can understand what we need to do. So what are some of the takeaways? 3 core takeaways. Big money is looking to manipulate the market for their own prosper. Okay. We saw it with Kramer saying it. They have the resources, they have the capital to do so. And they're being evaluated in a way where it's very high pressure and they need to make sure that the numbers look good and the numbers make sense. Okay. Another takeaway, they don't have your financial interest at heart. That may hurt some people, but it's true. They don't have your financial interest at heart, okay? If anything, they're trying to use you for their own personal gain in some way, shape, or form. Last takeaway is credible individuals will go against what you think, okay? They will go against what you think. I know right now there's maybe some people that have seen this, but Warren Buffett, he called, what do you call? He called Bitcoin rat poison, right? He called Bitcoin rat poison. Now, do I think Bitcoin is going away? I don't think so. I think Bitcoin's going to be here. And the more adoption and the more things that they do to actually integrate Bitcoin into these financial systems, right? I think is going to give us more and more confluence. But again, y'all, like these people, these big time leaders, I feel like a lot of times what happens is they're trying to throw the sin off. Okay, they're trying to throw the sin off. They're trying to make us look left while they go right, type of thing. What does this mean for us? Okay, we need to study and be on our game. Okay, this is why it's so important to have a trading plan because you're gonna have all these different factors and distractions coming at you as a trader. And if you're not able to see through this and have a very strong mind and understand what it is that you need to do, then you'll get lost in the sauce, right? You'll definitely get lost in the sauce. And I would be a proponent of honestly not really watching the news. I don't really watch the news. Don't go for the pump fake, right? I would be very skeptical of watching the news or reading articles because the whole point of that type of stuff is another aspect is you need the media to like evoke emotion. Like that's the whole point of the media, right? They're trying to create maybe like some type of hysteria or fear so that you can actually lean in and actually they can get paid too, right? Because the media, that's the business too. They're trying to make sure that they have stuff going so they can actually get paid. So I would maybe, and this is just something that is a principle of STB in a sense, is we actually pay attention to the charts, right? There are some fundamental things that we need to pay attention to and pieces of news or types of news that we need to listen to. But for the most part, y'all, we are very technical based, okay? Very technical based. Let's see here. Right, and some people may have to go through this phase, right? They may have to, oh, Rochelle used to be a reporter. You're not getting the whole story, trust me. Right, right. It takes somebody in it to actually know what's going on for sure. So thank you, Rochelle. But some of y'all may have to go through that phase where you're looking at CNBC every day and and looking at Mad Money and all this and all that, right? But the more you develop as a trader, the more experience you have, the more that you start winning, you'll kind of find your groove and have more of a balancing point if you want to, or just find something that works. So again, we need to have a mind of our own. We need to have a mind of our own. We need to read between the lines at times, right? And then last thing we need to do is we need to follow the money. What do I mean by follow the money? That doesn't mean when big money says, "Oh, the stock's downgrading," and like we get out of the money or we get out of the stock. No. What I'm saying is we need to understand how big money is moving, and we need to see how we can actually emulate that into our own approach, right? For sure, for sure. Like we need to see that. If big money is hedging, then it's probably at some point in time going to be beneficial for us to learn how to start hedging our positions, right? Another way that we can follow the money. If big money, if they have a lot of money in a stock, right? They got in at a certain position. That's pretty good confluence for us to say, hey, look, the stock might do well. I think I gave you all a list of hedge funds that are credible hedge funds to look at. You have Vanguard, you have BlackRock, you have Morgan Stanley. There's a whole bunch that you all can look at whalewisdom.com, and you can see how much money that they have in these positions. I can actually let's just go ahead. Let's see if I can show y'all. So this is what I mean by follow the money, y'all. We're on whalewisdom.com for those of you that are new. This is an area. So remember when I talked about regulations? So these hedge funds, they are more regulated than retail traders, right? And every I don't know what it is, maybe quarter or something, you have to, or whenever, maybe actually when you actually get into a stock or something, I'm not sure, but you have something that's called 13F filings, which these hedge funds have to actually report on. Because they have such a large amount of money, they have to actually report on what they're actually buying, what they're getting into. This is the actual site that can help us determine where they're putting their money. Now, there's going to be a lag, okay? It's not instantaneous, right? Like you'll see there's something called the date reported. So when these companies buy into a stock, when it gets reported, there's usually a lag time, okay? It's not instantaneous, just so you all know that. So it's probably I think it's about 90 days they have, or 45 days. So again, you have to know that. So you know, like, okay, what's kind of going on. But let's just do a stock. Let's do, I don't know, let's do Meta. What's going on with Meta? A lot of things going on with Meta. The metaverse, Mark Zuckerberg trying to, beefing with Elon Musk and all this, and people discrediting the metaverse, and oh man, and da 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 da. This is then the third. Let's see what's actually happening, right? Like, really good saying. Put your money where your mouth is, okay? If you think the metaverse is going away, where's the money to back that up? Are you exiting the stock? If you have all this money, are you exiting the stock? Let's see. So what we can do is we can go into something called market value here, okay? Market value, we can actually sort this through, and we can actually go into this, and we can see some of these hedge funds, okay, and how much money they actually have within these stocks. So this is the date reported, okay? So this is the action that's going on, the change in shares. This means that people are buying, this means people are selling, okay? This is how much ownership that they have in the stock, these funds. And then this is also saying like, hey, look, this is the percentage of the portfolio that they have. This is the prior, and this is the current, and this is the date reported. So 5/12/2023. So this is back in May. So this is BlackRock, right? So again, what you all can do, as these companies, if they come out and they say something about a certain stock, and they say, hey, this stock is trash. They probably won't say that, but they'll say, hey, look, we're downgrading this stock because of X, Y, and Z. Maybe, just maybe, what y'all can do, and it may be on here, maybe not, but you can go into that stock, look up that fund, and see, is that fund actually in this stock? Pop up. Is this stock, are they actually in this stock, right? Like, do they have money in this, and are they short in this stock? Meaning that they have, you can see here, it'll be either calls or puts. If they have puts in this stock and they're saying, hey, this stock is trash, y'all need to get out of it, yada, 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 then that's something that's probably going to be for their gain, right? Because you make money with puts as the stock goes down. So this is how you can, do your research and look between the lines, okay? So really good thing here. And also, again, right, like, this is why we watch multiple reports and try to piece the truth together. Right, Corey, right. But at the end of the day, it bubbles down. A really good report is just, where's the money at, bro? Like, what are you doing with your money? Even with teachers, like teachers, they may, oh yeah, do this, or even parents at times, right? Like parents may tell somebody, like your kid, to do something. It's like, are you doing that as a parent though? And it's hard to, you know what I'm saying? It's hard to kind of gather that for someone, and it's still off, right? So just wanted to share this as a resource for you all. Let's actually get into the latter part of the class. Let me go ahead and share my screen. So some of y'all were shouting them out, but I wanted to just go ahead and give you all some resources that you all can watch. Okay. So these are some shows that can help depict more and more what these hedge funds actually have to go through. Okay. And this show up here is about Bernie Madoff. For those of you that don't know who Bernie Madoff is, this is a person that essentially never traded anyone's money. Felicia, I don't know if Billions has a new season. I just got this picture, but they might. For those of you that don't know, y'all should watch this documentary if it's still on Netflix. If it's not on Netflix, then maybe watch this show. This is still about Bernie Madoff. But Bernie Madoff was essentially a person that posed as almost like a hedge fund manager, but he didn't classify himself as a hedge fund. Okay, his practice as a hedge fund, he was really taking people's money, and he was just taking people's money. He wasn't even trading the money. He was essentially using influence to get people to believe that he was growing their money at a rapid rate. And essentially, he amassed the wealth of over $65 billion by doing this, okay? Never traded the money. Robbing the planet. I'm telling you all the time. The biggest gangsters are on Wall Street. His assistant made 50 million, right? These people devised a Ponzi scheme so that what they did is essentially they were able to go in, they were able to do stuff unregulated, because a lot of the times he would say, hey, look, we're not a hedge fund. We're not a hedge fund. We're not a hedge fund. It's not what we do. And as a result of that, he was able to kind of maneuver through the cracks, okay, and trick people into giving them his money. And the thing is, what happened is, because he has such a good reputation, he actually helped found the NASDAQ. Okay, like he was one of the founding fathers of the NASDAQ, or to at least get that inception of the NASDAQ going. But because he has such a good reputation, okay, and he was well known, had a good network, word of mouth is very dangerous. Like, word of mouth is very dangerous, right? Because once you get a couple elitists in your pocket and that they can vouch for you, it almost becomes like a no-brainer, right? I'm not saying this is happening, but imagine if Tay was saying, oh yeah, this person is this and that, good person, good dude, you know what I'm saying? I really like him. Your view of that person changes because of how you have a relationship with Tay, right? So that's how this works. That's how this works, y'all. So really, really cool stuff. But want to go ahead and I actually want to get a quiz up for you all. And this is what it's about, y'all. It's about really giving you all the opportunity to understand the game that you're getting yourself into, okay? A lot of times people won't do this, and we want to make sure that we do this. It's like an STB University, right? Exactly, y'all. So let's go ahead. I'm going to go ahead and launch this quiz. iPhone said, can we do a class on buyer and seller zones? Good question, family. Dom said, love the quizzes. Thank you so much. So, yeah, I want to be able to do some of that type of stuff. Tay hasn't given me the green light to go ahead and actually teach that inside the Discord. And the only reason why is because what happens, y'all, is people, they pay, $15,000+ to come into STB. And some of that information is more, I would say, proprietary to SCB, and so I don't know if he'll give me the green light on buyers and seller zones. If he gives me the green light, I'm more than happy to teach y'all. If not, it's something that I'll probably have to do in more of a one-on-one setting, which I'm waiting on him to get the green light for that too, for one-on-ones. So we'll see how everything goes and whatnot. But yeah, until that happens, what I'm saying, keep coming to class. I'll make sure I can share as much information as I possibly can that I'm allowed to, for sure. It's just about protecting people's investments, right? Like you pay 25K and then someone else joins a Discord and the same information is being taught in the Discord, which is $50 a month. It may rub people the wrong way. Let's go ahead and answer these questions. So let's go over question number 1. Which statement is true? Hedge funds are concerned about retail traders' profits. Hedge funds have more capital than retail traders. Hedge funds are looking for massive returns, percentage-wise, each trade they enter. Right. The correct answer is going to be answer number 2. Hedge funds have more capital than retail traders. I think maybe 2 people put hedge funds are looking for massive returns, percentage-wise, each trade they enter, and that is incorrect. Remember, y'all, these hedge funds have millions and billions of dollars, okay? They are essentially putting that into the market. Now, what I can say is that if they are long on the stock, then that percentage may be long or big over time. But in terms of trading, and maybe I could have specified, but in terms of trading, which is more, I would say, short-term trading, because these hedge funds do invest. They do invest for 5 to 10 years plus, right? But they also trade. And a lot of these trading methodologies, they're trying to get really small percentages, right? Because if you can go into a stock with a large amount of money and get a 1%, 2%, 3% pop and get out, that's a lot of money for that hedge, okay? That hedge fund. So correct answer is hedge funds have more capital than retail traders. Question number 2. What is the core takeaway when it comes to hedge funds? The correct answer is going to be answer 1, which is it's important to read between the lines and put yourself in their shoes to better navigate the games of the market. Exactly. I think everyone got this correct. And that is the main takeaway that I want you all to understand, is that understand where you are in this game, right? How you're positioned, and who kind of maybe has more resources, more capital, and can dictate what happens, right? And then understand that to be able to navigate it. Last question, where do these hedge funds trade? Okay, so they use smaller time frames, typically beneath the 1-hour time frame for trading. That is the correct answer, right? They use smaller time frames, typically beneath the 1-hour time frame for trading, okay? Now, people said, hey, they use bigger time frames for trading. Some person said NA. The first answer is going to be the correct answer. Do they use big time frames for trading? They can. They can, right? Like they can, but majority of the time they're using smaller time frames. I can tell you all that. And they're usually doing it because of the algorithms that they have invested in, okay, to help them be able to do that. So there's that. Corey said, suggest the Enron documentary too. They were loose. Yeah, okay. Well, hey y'all, look. this was a great class. I appreciate the participation. Nancy, big shout out to you for this being your first Discord class. You know what I'm saying? I hope you can continue to show up to Eon's class, to my class. Tap into the daily newsletters that Tay is giving out. Whatever you need to do in order to feel better about what you're doing, continue to do so. But y'all, I hope you have a good weekend. Okay. Yeah, I hope you have a good weekend. I hope you all can continue to study, continue to soak up this knowledge. I will do everything I can to see if I can get some more information into these classes that you are requesting the best I can. And we'll try to get you all some type of update about one-on-one coaching when I can as well. So, all right, y'all. Y'all have a good day. I will get this up as soon as possible. And we out. All right.
Secure the bag, yeah, that's the brand, and we get to the bag.